How's it going, guys? We're going to be going over the top stocks for next week. They're going to be making the biggest moves in the market. And as we can see, tons and tons of companies are reporting earnings for next week. So we're going to be going over the top 10 that we're going to be watching. These are very volatile stocks. I'm not necessarily telling you to invest in them, but we will be watching them because they are going to potentially make some pretty big moves, which could be some great opportunities for you guys to make money. So first stock on our list is going to be Palantir Technologies, ticker symbol PLTR. As we can see, sitting at a price point under $10 per share. Pretty volatile stock, if I were to say so myself. It's down 70% in the past year alone, going from all the way to almost $30 per share down to $8 per share. So when it first came out, IPO back in October of 2020, it definitely was a volatile stock, hitting highs of $35 per share before going down to $8. But they do have government contracts, so they do have a steady stream of income. But it is one of those stocks that was pumped up by Wall Street bets, which was why it had such a high increase in price back in 2020. So the stock could definitely continue to fall as it was a rally stock, and not many people are really watching it. So keep an eye out for Palantir this week. Next stock is, of course, another meme stock, Clover Health Investments, CLOV. Back when it IPO'd, it was also one of those stocks that ran up quite a bit before dropping substantially. So I definitely don't recommend investing in the stock. It's pretty risky, especially since it's in the healthcare industry, which is very volatile. But overall, this was a stock that really rallied because of Wall Street bets, who pumped it up. And then next up, we got Norwegian Cruise Lines, which does report earnings this week. Ticker symbol NCLH. Not really a meme company, but it was a meme stock. Once the COVID pandemic hit, a lot of people definitely ran to airlines, cruise lines, and bought up those stocks. Um, but I do think that cruise lines and travel is definitely taking a hit right now. But for the long term, these companies aren't going away. People are still going to take cruises. People are still going to take airlines, and cruises are definitely a great way for people to go on vacations. So they're definitely going to be staying here, and it still hasn't recovered past the pre-pandemic highs. They definitely got hurt a little bit, so it is going to take a while for them to recover. But overall, I think that if you're a long-term investor, buying shares of this stock is definitely going to be a long-term play that could play out pretty big. And next up, we have our beloved AMC Entertainment, sitting at a price point of $5.55 per share. A lot of people thought the stock was going to go to $100 per share back in late 2020, early 2021. It did run up to highs of around $37 per share, and a lot of people, a lot of YouTubers, trades, Mac Cores, they were really advocating for the stock. But this stock really has not been performing well. Myself, I did buy up a few hundred shares of AMC. I did lose a lot of money on that, but I'm glad I sold when I did because it is $5 per share right now, which is way back before the huge pumps. So next stock on our list is going to be Plug Power, and this is a great stock for people who are looking for an electric vehicle play, just because they're trying to develop these fuel cells that will replace batteries in electric vehicles, more efficient, and basically powering the cars that we're going to be driving in the future. Cars are definitely going to be transferring to electric in the future. California in 2020 and 2035, all new vehicles sold are going to have to be electric. So this is definitely a good stock to invest in if you want to invest in that space. Next up, we got an electric vehicle maker, which is Lucid Group, ticker symbol LCID. And all these companies are reporting earnings, but this one is a pretty volatile one, as we can see. Had a really great start, going to $53 per share, all the way from $10 per share after it underwent a merger. But yeah, as we can see here, it dipped down pretty low, and then went back all the way to the 50s highs. Before it's been on a pretty big downturn. Now, we have to keep in mind that a lot of stocks this year in 2021 are down, so it's not unusual to see stocks like this having a negative 63% in the past year, pretty much losing all of their gains that they had in 2020, 2021. So a lot of these stocks that are down definitely can recover once we have a better market economy for sure. Next up, we have Novavax. Pretty crazy stock. As we can see, it almost went to $300 per share, and now it's sitting at under $20 per share. Novavax, they are creating vaccines for the COVID virus, but a lot of people are pretty much not really investing in these companies anymore. COVID, a lot of people are trying to ignore it. It's still out there for sure. There's a lot of cases. People are getting the boosters, but they're not really as hyped as it once was back in early 2021. So I would probably stay away from this as well. Pharmaceuticals, biotechs, healthcare industries are very volatile and it's pretty risky. Next up, we have Roblox. They did pretty well during the stay-at-home quarantines just because it's an online gaming platform. It's also a marketplace. People can make money by selling content on there, similar to Minecraft. So Roblox definitely has a pretty big user base, pretty great platform as well for people to make and share content. So Roblox is definitely a good stock for the long term, despite it being quite down a bit, 50% in the past year. And then next up, we have Beyond Meat, which also had a pretty great start, going to over $200 per share. And now we're sitting at $14 per share. So a pretty substantial loss for people who bought into the stock early. But overall, Beyond Meat is selling in a lot of grocery stores. A lot of people love their products. And just because a stock is down this much, as long as you believe in the company, as long as that they have great products, investing in them for long term can be a great play. Even though it's down a lot in the past 5 years, if you're holding these stocks for decades, you could see some really huge returns if they do play out big. And then next up, we have NIO, which is an electric vehicle maker. They actually did pretty good last Friday, up 17%. But overall, their highs was around $60 per share. They do have a ton of products out, a lot of electric vehicles. They even have an EB9 supercar. They have a 7-seater SUV. So a lot of great products that this company is making. Their headquarters are in China, so they are getting hit with a lot of manufacturing issues. But overall, they also provide users with home charging, Power Express valet services, and other power solutions, including access to public charging, which is pretty huge for an electric vehicle maker. So that's about it for this video. The top 10 stocks we're going to be watching for next week. These are going to be pretty volatile as they all do have earnings. I'm not telling you to invest in every single one, but you do want to check out these stocks when they have their earnings date, just because it is going to be volatile. And if you see an opportunity, make sure you take them and make sure you take profit if you are day trading these stocks as well. Thanks for watching.